Good morning, friends. We are opening the second day of our discussions with a session about sustaining the dynamics in emerging markets. And as you may have noticed, I don't look like N.K. Singh. And I have to convey to you his regrets. He was sent yesterday night somewhere in India, so he had to follow instructions, if I may say so, and he sent his apologies. He will be with us tomorrow, but so I am made to work early in the morning, but it is a pleasure to be with our three eminent speakers. I don't think I need to introduce Mr. Montek Ahluwalia. For any of you who has been to India, you know that he's an economic star, and I was about to say an economic czar at the same time. But to his left is Mr. Rufus Yaksa, who is the Deputy Director General of WTO. And to my immediate left is, and I guess many of you know him also very well, is Dr. Supachai, who is the Secretary General of UNCTAD. As you know, UNCTAD is the organization which regroups the emerging market countries and has been a platform for these countries in terms of helping them to sustain their development. Now, the theme of our discussion this morning is really to look at the situation and at the prospects in emerging markets. Many of these emerging markets, and we have been discussing that yesterday, have been enjoying quite good growth over the last years. As we were saying yesterday, in a way, a kind of 5, 7, 8% growth over quite a few years. They have achieved a kind of critical mass, and many of them have very good reasons to look at the future with some optimism. But at the same time, we know, and we discussed that already yesterday, that there are some important challenges, there are some structural weaknesses, and there are risks. For instance, the question has been raised on a few occasions yesterday on how the economic crisis, or should I say the economic suicide in Europe, is affecting prospect for these countries because, of course, the importance of exports for them. We know that while the US economy is recovering, it is still a very vulnerable recovery. We know that many of these countries are facing very serious bottlenecks with respect to infrastructure. We know that at some stage, if things continue like that, environment issues, climate change issues might create very important risks for the economic development of a number of emerging market countries. So let me turn first to you, Dr. Montek Ahluwalia. And in a way, if you look, not, let's say, the budget which has been presented, but if you look, let's say, 5 years down the road, what are truly the kind of immediate priorities or challenges that a country like India needs to find ways to address if it wants to make sure that it gets into this kind of 9-10% growth, at least on a sustainable level for the coming years?
Well, thanks very much, Claude. 9-10% is pretty high. I just want to put our growth expectations in some perspective. Before the Lehman Brothers crisis, for a period of 5 years or so, India did better than 9%. And that was a very heady kind of experience. And it certainly changed people's minds domestically about what's possible. And obviously, it also led to a lot of international recognition that maybe India is now onto a really rapid growth path. But you have boom periods and you have slumps, and you really ought to look at what is an underlying growth potential. Now, we've done the usual kind of longer-term analysis. And if you take a 10, 11, 12-year period, then the average growth rate in this period comes out to around 7.5%, okay? And if you use statistical methods to filter out cyclical variation, it still comes to around 7.4%. So a conservative assessment based on the past 10, 11 years would be that the Indian economy has demonstrated a capacity to grow at 7.4%. Right now, that is this year, which is about to end in another 2 weeks, the growth rate is only going to be 5%. It could be a teeny bit better than that, but the latest official estimate is it's going to be 5%. This, of course, leads to a great gloom and doom mood, which is good and healthy. It makes the government wake up, and everybody says to the government, what are you doing about it, which is also good, and the government is doing something about it. But I would assume that there's absolutely no reason to believe that what we are observing now is a significant departure from trend. It's a blip, and I think the economy should get back to trend. What is our hope? Well, our hope is that by the end of this 12th five-year plan, which means, say, by 2015-16, we should actually push the economy above 9%, so that it's then on a sustainable 9%. That's very ambitious. But, allowing for the fact that planning is about being ambitious. I mean, why on earth would you have a planning exercise if you didn't want to set ambitious targets? Still, it would be reasonable to assume that a growth rate between 7 and 8% is what I would call a passing grade. I mean, I personally think that if we don't do that, then it's actually, it would be a fault on the part of the government and the system. So I'm reasonably confident that over this 4 or 5 year period, that's going to be the growth rate of the Indian economy. Now, commenting a little bit, all of that is true, basically based on domestic capabilities. And remember, these are actually improving over time, particularly on the human side, education levels, skill levels, etc., including also, I think, on the institutional side. Lots more entrepreneurship, a lot of learning in different states in the country. I think there's far too much attention paid to policy as implemented by the national government. Many of the important things that need to be done are still to be done. But a lot has actually got done. A lot of the difficulties that entrepreneurs face, and they do face, in getting a business started, or for that matter ended, really rest at the state government level. So we are actually going through, in my view, a 5-6 year process where state governments are going to learn what is it that they have to do to get the maximum benefit from the freer economic environment that has been created. And I think the good news is that several of them are learning. The bad news is that not everyone is learning, but that never happens anyway. So looked at from that perspective, I think on the supply side, 7.5, 8, and if we're really good, we do better than that. The worrying side is, what does this assume about the world economy? I mean, obviously, we're not an isolated entity. And I think from the global, I mean, I'm no expert on what's going to happen in the global economy, but we assume that many of the positive things that are going on in India on the supply side are actually going on in many developing countries, emerging market countries, especially in Asia. I mean, we are fortunate that we happen to be in the part of the world that is actually growing rapidly. China is slowing down, but is always expected to slow down. I mean, they've done 20, 30 years at this double-digit rate. So actually their trajectory is pretty much as projected. East Asia is beginning again to catch up. I mean, in the last couple of years, a lot of East Asian economies have bounced back. We think India is going to be in that category again in this coming year, 2013-14. We're integrating with Asia. I mean, we have signed free trade agreements and this and that with Korea, with Japan, with the East Asian community. So basically, all the sort of economic factors will work to in favor of India and East Asia benefiting from each other. But you know, the rest of the world is, particularly the United States and Europe, extremely important. So it is a matter of concern that prospects for growth in Europe are very dismal, listening to my European friends, in the sense that for the next 4 or 5 years, almost nobody is projecting significant positive growth. US is doing better, 2%, maybe something like that. But you know, even if you assume a slightly pessimistic forecast for this part of the world, I think financial stability is very important, because the fact of the matter is, globally, it is the rapidly growing countries which it is logical for people to invest in. Mainly because they're catching up. I mean, you know, they have a lot of room to go. And I think these countries would be potentially the most logical places for investment to go. India needs that investment, because the biggest weak point in India right now is actually the current account deficit. It's too large. We think it's a mirror image of the fiscal deficit, which has also expanded. And of course, you must have discussed in the context of the budget that they're trying to bring that down. But they won't be able to bring it down very quickly. So from our point of view, we need to survive the next 2 years, which means we need to survive a current account deficit of 4+% of GDP, which is almost twice what I would regard as comfortable. Yes. And the only positive there is that cumulatively, India has not received the amount of investment that is logical for an economy of this size and the present level of openness. So our name of the game is to make sure that in this year and the year ahead, everything is done to make India an attractive business destination for foreign investment. I won't go into, I'm sure you discuss all that in the budget, and I'm sure we can do more, and we will do more. But you know, if that works out, and foreign investment, both in the stock market and also in FDI, were to come in on the scale expected, then I think in a couple of years, we will be back on that 8% growth path. And obviously, if you project that, then India will have a larger and larger footprint globally. My recollection is that at about 8%, we will end up being the third largest GDP in the world by 2030. China will, of course, be number one, US second, India third. We won't regrettably be the third richest country. We'll still be a sort of middle-income country. But in terms of size of market, anyone anywhere in the world with anything to sell and thinking what's the kind of plans they ought to have for 2030 should be thinking very hard about India, especially since they've already thought about China. So, I mean, China has absorbed a huge amount of investment. I'm sure they can absorb more. But in a global balancing effort, India should be an attractive destination. That's my medium-term projection. I'm sorry I've taken too long.
No, you didn't. Let me just follow up with one question, and especially with respect to your portfolio of responsibilities. To what extent, again, looking at the next 5 years, and you know better than anybody else that the infrastructure issue has been a tremendous bottleneck. To what extent do you think that over the next 5 years, enough will be done to ensure that you have the ability to get into what you said about this 9-10%?
Yeah. No, I'm glad you're giving me an opportunity to clarify. You know, our perception is that the economy is now responding to market signals quite well. So really we need to ask ourselves, what is the job of the government in this system? And it's quite clear that the job of the government is, first of all, infrastructure, hard infrastructure, and second, soft infrastructure, which is education and health. In addition to that, orchestrating policies, so let's say the bottom 30-40% of the country are also perceptibly showing an improvement. That's really the job. And I think I have absolutely no doubt that on the infrastructure front, we would simply be not doing our job if we didn't fix that problem. Part of that problem, I mean, part of the fixing of that problem is that we are now moving into a world where a lot of this infrastructure has to be developed through public-private partnership and not through just public investment.
Exactly.
That actually creates some complications because, you know, when you're doing everything through the public sector, while it's not as if people trust the public sector on everything, but to fix something because some public sector unit is building a road or building a bridge or building an airport looks like sort of fixing infrastructure. When you do it through a public-private partnership mode, anything that you do to help someone who's building an airport is also helping a particular private firm. Therefore, the responsibilities that lie with government in getting something done have to be very clearly understood and defined, so that when you're trying to fix these things, it's not seen as some undue benefit. And I think that has been a big problem in the last year. But actually we've learned from that, because lots of people have raised all kinds of objections, not necessarily why is this being done by the private sector, but you know, problems relating to land acquisition, problems relating to environment clearances, problems relating to forest clearances, etc. So we've now recognizing that these become complex issues, we've actually set up a mechanism which is called the Cabinet Committee on Investment. And this committee is designed precisely to raise the level at which potentially controversial decisions are taken so that the implementation of infrastructure projects moves quickly. And in my view, nothing is more important to bring about a revival of confidence on the part of investors, both domestic and foreign, than demonstrating the success of this instrument. Government's very aware of it, and I'm quite sure that if someone wants to track whether the Indian system is moving on target, they should simply track whether the Cabinet Committee on Investment is achieving some success. Because I can assure you that if it's not, then we are definitely not on target. And if it is, everything else will fall into place, or almost everything else.
Thank you. Thank you. Let me turn to you, Dr. Supachai. As I mentioned, you are the Secretary General of the organization which really regroups all these emerging markets. And your organization is dealing with the kind of issues that this group of countries needs to address if they want to be able to really achieve sustainable growth. Now, when you look at the experience of the different countries, when you look at how they try to implement investment policies, when you look at the way they try to, in a way, create more entrepreneurial spirit, all these kind of very crucial issues for sustaining growth, what is your assessment of the biggest challenges that these countries are facing, seen from your organization? And maybe you could give us one or two examples when some of these challenges or structural issues have been addressed in a way that could be seen as a kind of an example to follow by other countries.
Right. Let me start by saying something upfront that will not surprise you later on, because I'm not trying to be provocative for the sake of being provocative here, but as you've been alluding to the work of UNCTAD, we try to be presenting the global view in balance with a global view, particularly economic view, that is being seen and presented by some of the major organizations around the world. So that particularly the emerging countries, developing countries, would have ample choices that they can select how they would approach their own development perspective. I have 3 or 4 points in terms of structural needs for trying to get this constellation of growth to be well embedded in the present generation of globalization that I hope will be less finance-led than the past generation of globalization, which has led us into a recurrence of crisis after crisis. This time at UNCTAD, we are discussing what we call development-led globalization. which means something that yesterday, I guess it was Dr. Olan who talked about inclusive development, Patricia who talked about the need to be less arrogant when we forge a development partnership between the North and the South. And when Ronnie talked about the kind of exploitative movements in the areas of mining and minerals and extractive industries, that we have to change the way we work with countries that produce only primary products and those who can exploit them, so that we will not be replicating the things in the past. Ronnie used a very expressive term of stealing, and not to replicate that kind of a practice. So the world has actually become much, much more intertwined than before. I heard some professors, economic professors around the world, talking about us being less and less actually intertwined, but if I looked at the way we've been trying to solve issues like at the Rio +20 meeting, the future we want, the way we are trying to sort out the multilateral trading system, the way we have to deal with the kind of financial crisis, being it in Europe, in Asia, or in the United States, we can only do it through multilateral solutions. So we really need all of us to be joining hands and doing collective actions and try to forge certain coherence in the way we do our work around the world. Now, there is a story that is told mostly in China. When I go there, many times people keep telling me the story that one day the two old women who pass away and go to heaven, one is Chinese, one is American. The Chinese lady in heaven, she meets up with the American lady, and first thing she said was, "What a pity. I just been saving enough now. At this moment, I save enough to buy a house, and this happened to me." The American lady responded by saying, "Look, I just finished paying my last payments for the mortgage, and now this happens to me." So you see, the point I would like to drive at the beginning, at the outset, this is the first point, that in order to have this constellation of growth that would be well embedded in the so-called development-led globalization, with inclusivity, with a kind of partnership, with a kind of transparency in the way we are going to exploit or make use of natural resources around the world, we must really be able to devise a kind of global economic governance that really everyone can share. And this has been something that we at UNCTAD, us at the UN system, always been trying to persuade countries around the world to do better than just to set up something like G20. It's not that G20 has not been useful, just the opposite. G20 has been wonderful in 2008. When they got together in 2008 and try to trash out their differences in the way they can craft the kind of joint stimulus actions. Fiscal stimulus that has been done at that time actually helped to revive the global economic recession in a very speedy manner. That was done very well. But I guess you would have to agree with me that since some of us begin to exit from the recession, this has been an uneven exit around the world. And the uneven exit actually means that this is going to be another business as usual kind of solutions. We are out of the mess. We can allow our banking system to go back into the same kind of casino banking that they've been committed to. We can allow countries to go into deficits forever and not be able to resolve that because we have differences in the way we save and the way we spend. So my first point is that if we need to have new constellation of growth that we can share around the world and not to be born or to be led in terms of locomotives by the US in the past, EU in the past, or now with the emerging countries, we may need to have a set of rules, global rules, wherein we all share. Can you imagine if in the midst of the crisis in 1990s in Asia, if we would have asked to appoint one Asian managing director of the International Monetary Fund, would the world have accepted that? They would have cried foul. How can you have an Asian leader to be heading the fund, which was providing all this standby credit to all these Asian countries in difficulty? But when a European takes over, there was a time that at the moment, if you look at the IMF balance sheet, 80% is being taken up by countries in Europe. I'm saying this and nothing to do with my good friend Christine. She's one of the most wonderful person. But I'm asking for the kind of same standard that we have to apply to global economic governance, and don't ever go back to the double standard that has been used in the past. We've seen so much disasters and turmoils that have been created by the kind of pro-cyclical macroeconomic policies that have been recommended to those countries in recession, and just being turned around because countries that was in need of pro-cyclical are countries that are more advanced than others. And if you look at the way reserves are being augmented around the world, international reserves, there is no way to go about this to escape the fact that at least two-thirds, I said at least, now maybe more than two-thirds, two-thirds or three-fourths of the global reserves are in the hands of the Asian countries. And not to let them do anything, to have more quota at the IMF, to have any more say, I think it is just not acceptable. I would even venture to say that it's about time an Asian is appointed for the next managing director of the IMF. So this is my first point on global governance. We need something better, and G20 must be driven not only by the IMF or the World Bank, but the UN system must have some say in that. And don't ever say that the UN is not efficient. UN could be efficient or less efficient depending on the quality of the participation of the member countries. Point number two, you were asking about the dynamic sources of growth for the South. Because this day and age, as Montek has been saying, I mean, you cannot rely on the next round of growth. If you look at the recurrent crisis, Europe, this is another year of recession for sure. UK may go not into the double-dip recession, but triple-dip recession. Countries like Greece has been shrinking for 5 years already. This is going to be the 6th year that Greek economy is going to shrink. Already 1/5 has been lost from that GDP. 1/5, sorry, 1/4, 25%, 1/4. Unemployment in Greece, 26%. Youth unemployment, more than 50%. Now, we cannot bank on recovery based upon growth from the more advanced countries. Can we bank upon the growth coming from the emerging countries? I don't think so. Again, Montek has just been saying, in spite of all this growth, the size doesn't matter very much. If China is going to be second largest, India third largest or fourth largest economies of the world, because the size of the population is there. That China has exceeded Japanese level of output with the size of population is nothing earth-shaking. It has to be like that. But if you look at the difference in terms of income per capita and per capita consumption of global resources and per capita consumption of global energy resources, and also the emission of all the gases that are so detrimental to the global health, economic health. So you can see that there are still differences there. So what we have to do now is to try to have the kind of growth that is being nurtured in the rest of the world, meaning developing countries, LDCs, emerging countries, that they can sustain it. The issue is now to sustain this kind of growth, that the growth would not be along the line that will be so wasteful in using natural resources, and the growth will not be unbalanced and based upon the kind of the growth of the wealth-based income, and to leave the wage-based income behind. And this happens throughout the whole world, not only in emerging countries, even in the United States. Wage-based income has been shrinking all the time in terms of share of the total income. So the second point that I would like to make is that the kind of the regeneration of the southern economies will have to be nurtured in a way that the southern economies, developing countries' economy, will have to be sustained and sustainable. And the South-South trade, which is moving along so well, will have to be supported by the kind of policies of negotiations or trade negotiations in a way that this could be sustained. For example, in the areas of spatial concession to be given to the poorest countries in the world, this needs not await the final outcome of the Doha Agreement. Because this can be years or this may never come. Nobody knows. But the duty-free, quota-free market access for the poorest countries in the world must be there. India is giving it, US, EU, they're all trying to give it, but different kind of conditionalities. The poorest countries, they just don't know where to turn. They don't have so many rules of origins that they can abide by. And so it's become something that is just wasteful because offer but not use. Like everything but arms. Giving away everything but arms, concessional market access to poor countries, but very little use has been made of it because there's so many different conditionalities that they cannot meet. So South-South cooperation also means, at the moment, as you can see, the European countries are trading among themselves more so than they trade with the rest of the world. It's more than 50%. It's about 55% now. So the rate of growth is exponential. It's very important that this is being maintained. And I would say another way of maintaining it is through what I would call the developmental regionalism, which is indicative of the deeper integration effort, what sometimes people now call partnership agreements, that is becoming so popular around the world. A fourth point is the need to have more balanced growth in a way that we do not depend on the old model of export-oriented growth based upon exploitation of cheap labor costs and based upon the kind of liberalization that spawn what we are seeing at the moment, global value chains that sometimes can be so footloose that can go to places where they can make use of the cheapest sources of input and labor and then move things away when they have exhausted those sources. We have to do better at the kind of what we would be saying in dealing with domestic demand, not really to jack up domestic demand, but to be able to use fiscal monetary policies that can aim at development-oriented growth. That growth will have content. Growth will have contents in terms of having more equality, having more jobs creation, having gender empowerment, having regional distribution, having the kind of green investment, and the growth that is accompanied by less emission of carbon dioxide. So this is something that we have to be able to generate, and there are things like, in order to avoid excessive precautionary savings in the countries, that people unnecessarily have to save for their old ages and for their health care and things like that, the social protection that has been talked about so much around the world and really widely accepted cannot be fully implemented without the same kind of reform that will have to be undertaken in the areas of fiscal policies. So we can say as much as we can, we would have universal protection and complete health care protection, all this other thing, without doing the same thing to our fiscal policies. Because if you have less than, let's say, 10 or 15% of GDP of revenue, you cannot say that you will have this social protection that will be viable. It would not be sustainable. And the last point that I would like to make is that because, and I'm at the UN at the moment, this is my last year, so I can be more provocative, I think. We like the way international assistance can be dealt with along the multilateral lines. We do not like bilateral assistance very much because sometimes, or most of the time, bilateral or earmarked, let me say, earmarking multilateral aid or bilateral aid is not what we want. Now, at the UN, at the moment, we are going through difficult patch, as with most of our traditional donors going through difficult patch. We are asked to do more, much more, with much less every year. To do much more, much less every year. So this is a difficult task. There are a lot of things that I would like to do more, let's say in terms of investment policies that should be targeted at how we can mobilize more green investment. How can we do investment in certain area with a kind of conditionalities that they would have to emit less, a minimum level of carbon dioxide? how can we create renewable energy investment in a way that there will be no trade disputes. As you can see at the moment, trade disputes are in the areas of energy renewable, because some countries will support, subsidize that, which they are supposed to do, but some countries do not want them to support so much the subsidies. Or if they want to support or subsidize, they have to subsidize everyone, including foreign participants, which is fair enough. But my point here is that we need to find innovative ways of financing. Innovative ways of financing. And what I'm going to say will be a little bit controversial at the moment, but let's say we believed in taxing international transaction more, like in the area of financial transactions. I don't like it to be called Tobin taxes, because Tobin taxes didn't have anything to do with financial transactions. It's more or less to do with external movements of funds and across the country's movement of funds that was Tobin tax. But the transaction taxes on financial transaction with only 0.001 can generate tens of billions of dollars that can be put into the green fund that the UN needs so much, so that we can apply it to the adaptation for countries that have to change the way or transform their production structure. It will have to be carbon neutral kind of production, and that costs money. So we need to, and we agree at Rio Plus 20 to set up this green fund, but we don't have the money. And the donor countries are saying, look, ODA is 0.7, we cannot even emulate that. It's now about 0.2 or 0.3. We cannot begin on another new funds. We have to start talking about the areas of investment in agriculture, for example, because we can't allow this constellation of growth and emerging countries to grow at the rate of 6, 7, 8, 9%, with still 800 million people being malnourished, going to bed hungry every year. The level used to be 1 billion, but I think it's about, at the moment it's about 800 million, which is 800 million too many. And this is not, the targets are not being met through the Millennium Development Goals and things like that. We have to be able to find supplementary support for that. In Africa, the AU summit promised for each African country that they need to mobilize at least 10% of their national budget to be placed in terms of investment into their own agriculture infrastructure. Only a few countries did meet this kind of objectives. What we looked at the UN system is that we need to have a supplementary financial support from the private sector. So this is where the things is coming. So in spite of all this growth and everything, developing countries, emerging countries will have to work with the private sector. And we are looking, for example, at the sovereign wealth funds, that they have huge amount of funds that are very little invested, and very little invested in productive areas like agriculture. And they are doing so now at the moment, but they are doing so with a wrong perspective. Most of them has been speculating in land, what we call land grabbing in Africa, in Asia, which is detested by all of us. So we have set up at the UN a set of principles called Principle for Responsible Agricultural Investment, called the PRI, P-R-I-I. This is a work done with UNCTAD, World Bank, FAO, IFAD, and it's a set of principles. And there are principles like this, particularly in the areas of investment, to make investment more sustainable. We love to support private investment, FDIs, but we love to have the FDIs to be more aligned with national development strategy and not to be doing for the sake and benefit. Of course, it has to be shared between the benefits to be reaped by those investors, but at the same time, countries must have their own policies and they must be able to harmonize their policies with foreign investment. Thank you.
Thank you, Dr. Supachai. I will get back later to one very important point you made, but before doing that, I would like to turn to Rufus Yerxa, because, and we have alluded to the trade issue. We know that trade is a very important growth driver. At the same time, as has been mentioned, and you said it very well, we don't even know if the Doha round will in a way exist or not. In fact, there is widespread skepticism that it will be signed. At the same time, we see a proliferation of regional and bilateral trade. To what extent in the present context, can emerging market economies leverage more trade, be it regional, bilateral, international, to sustain their growth strategies? And to what extent do you see some issues, obstacles that can be addressed without reaching this kind of grand scheme agreement that, in a way, the Doha round exemplifies? So, please.
Well, thank you, Claude, and thank you for inviting me today. As you know, I work in the field of international trade diplomacy. I'm always reminded of a quotation of a former Indian foreign minister who said, "A good diplomat is someone who thinks twice before saying nothing." I'll try to do a bit better than that, but given the time limits, I want to just make 3 or 4 key points and try to address your question, but also take a step back and look a little more broadly at the international trade regime and its implications for this question of emerging economies and growth. I guess my first point is a very simple one, straightforward one. I hope it's not contestable, but it may be. To me, the biggest risk that emerging markets face in restoring and accelerating their economic growth lies in their deciding to somehow turn their back on the process of economic liberalization. The biggest losers from this current difficulty, economic, shall we say, risks that we face in today's world are likely to be those countries that, not those countries that integrate the most into a global economic system, but those who decide to pull back from it. And if you really look at what's happening in terms of the way production is evolving around the world, the way manufacturing and global supply chains are becoming a reality for all economies, both developed and developing. The fact of the matter is that unless you are part of that global supply phenomenon, unless you are part of the integration, you can't really drive higher levels of economic growth. You know, within all countries, within developed and developing countries, you can look at sectors that are internationalizing and sectors that have been highly protected. And if you really think about where the economic growth is coming from, it's not going to come from those that are the highly protected sectors. You take a country like the United States, you know, still has 40 to 50% tariffs on certain kinds of footwear products. I don't hear a lot of people telling their sons and daughters, you've really got to become a footwear manufacturer in the United States. That's not where the economic growth is going to come from. We shouldn't expect economic growth to be driven by Japanese rice farmers or sugar growers in the United States, nor should we expect them to come from those who are in the highly privileged, highly protected sectors of economic activity in the developing world either. The fact of the matter is it's those companies and those countries that are willing to essentially face the cruel realities of international competition that are going to grow the fastest. And I think we really have kind of reached the tipping point in terms of that phenomenon and the implications it has for policymakers all over the world. Now, there are obviously very big downside risks to being part of that kind of global environment. You know, we see it in all societies, the problems of dealing with growing income inequality, environmental challenges brought on by higher use of resources and energy, certainly things like price instability, risks to commodity prices going higher and the implications that might have on things like food security. But I would argue that the reality is that those risks have to be addressed through domestic policy and national governments working on getting the policy mix right domestically rather than pulling back from the international commitments from the process of international integration. Now, as I look at the WTO, and we've had a lot of people discussing the WTO, I heard the foreign minister yesterday, questions, obviously people looking at the Doha round and saying, isn't this a sign that the multilateral system is in distress and that people are turning towards other solutions? I guess my first point is that after many years in my career of trying to work on building the international policy framework for this global economic integration, I would really say that we've had far more success than failures. If you just look at the WTO, the fact that it came into existence from the old GATT not too long ago in the grand scheme of things, in 1995, and actually since then it has grown substantially and been strengthened. First of all, you think that China only became a member in 2001. Russia just became a member this last year. Its membership has grown substantially. More importantly, the credibility of its rulemaking, its dispute settlement system has been growing steadily. It is true that we haven't been adding many new agreements recently because of negotiating problems. There are hopes before this Bali ministerial at the end of this year of getting some agreements. Patricia Hewitt talked about trade facilitation deals, some things in the area of agriculture, some things in the area of special and differential treatment for developing countries that are possible as a smaller package to restore confidence, and then move on to a broader agenda later. People point to all of these bilateral and regional agreements that, as if this is some kind of brand new phenomenon. After all, we have about 300 regional and bilateral deals in the world today already, and that process has been going on for many, many years. We do see some very big deals being talked about now, TPP, US, EU, and many others. I guess if I want to take the optimistic point of view towards all of this, of course there are concerns about whether it begins to call into question the commitment to a broader multilateral framework. The first point I'd make is that still, even with these exercises underway, all of the biggest trading relationships in the world still depend on WTO rules as their foundation. They are not based on a foundation of a deep bilateral free trade agreement. That may change with some of these negotiations underway, but I would argue that may actually make it easier for us rather than harder for us to do business in the WTO in the future in consolidating all of those agreements back into multilateral rules. If you're going to do a free trade agreement with your biggest trading partner and your biggest markets, it's not much of a great leap of faith after that in policy terms to then turn it into a multilateral commitment. So I'm actually not pessimistic that this is going to somehow derail the rulemaking system that we've developed globally. And back on WTO, if you can look pessimistically, Dr. Subachaya, at many of the crises that have occurred during the era of globalization. But I would say on balance, in the post-war era, since the GATT-WTO system has been strengthening and deepening, we've done a much better job of managing those kinds of crises and not having them turn into the Great Depression of the 1930s or World War II. We have managed everything from the Latin American debt crisis to the Asian financial crisis to the financial problems of 2008 and beyond in a way which has essentially kept everyone committed to global cooperation, to economic integration in I would say, a very important way. And I think the WTO has been part of that story, along with a lot of other multilateral and international understandings. And that's my last point. To me, the best path forward for emerging countries, really for everybody in this kind of environment, is not to try to exacerbate and emphasize the the policy differences between rich and poor, between large and small, between slow growth and fast growth countries, but to realize the need for actually mutual solutions, mutual concessions to one another in a trust-building environment. You know, to quote a great American, Thomas Paine, we will either hang together or we will all hang separately. And I think that really is the challenge that the international system faces today, how to build a world of more trust and greater mutual respect based on a rule of law that will sustain an international growth strategy for the future.
Thank you. Before we turn to questions, and I would like to get back to a point Dr. Ahluwalia made, and of course a point that Dr. Supachai made very forcefully about, in a way, the need for a major restructuring of the global economic governance and the risks that are being created by the economic situation in Europe, especially, and the United States. In a way, what is striking today, and I would like your reactions to that, is that the world champions of patronizing, meaning the US and Europe, represent today the greatest threat to economic growth because of the irresponsible behavior that they have in the last few years. When you look at the way Europe, as I said, is committing economic suicide at the moment, when you look at the sclerosis of the decision-making process in the United States and the kind of situation we have now with the sequestration, is not there here really a source of thinking to really create the urgency for this restructuring of global economic governance? Doesn't it make you, I would say, more impatient when you look at the situation? Because, as you said, if the situation continues like that in the US and Europe, your export, or part of your export, are threatened. If we have an IMF which is lending 80% of its resources to Europe, what does that mean in terms of the ability of the IMF to accomplish its mission if there is a new emergency in the world, and so on and so forth? I would like your reactions to that. Both, the three of you. Yours, and yours also.
No, it's it's quite clearly a very difficult period for the world. And it's true that the earlier conceived engines of growth were the industrialized countries. You know, we all know the problems in the US, but not really for me to say what they should do about it. I think they're aware of the problems too. US growth is not that bad. I mean, US is growing about 2%. It's Europe that is really in recession. So, you know, I think finger pointing and saying, because you're doing this to yourself, you're hurting me, is not going to have any effect, because if they're not concerned about what they're doing to themselves, it's very unlikely that the spillover effects will make them change their mind. I mean, it is a problem. I think they know it's a problem. I agree that the global governance mechanism doesn't seem to be focusing enough attention on it. You know, I'm not less concerned about the IMF and whether they should lend or not lend. Actually, if you look at the board of the IMF, the board has supported everything. So you can't really say that, anybody said you shouldn't do it. As a matter of fact, the major change that was recognized earlier was that the rescue of Europe cannot be achieved by the IMF alone. And secondly, that the IMF must give priority to the needs of the developing countries. Now, fortunately, it hasn't been called upon by the developing countries, as you said, because of all these huge reserves, etc. So it's done some lending. Most of the money has really come from the ECB. So our concern really is, when is Europe going to get back to somewhat more decent growth? That's a legitimate concern. But you know, one has to recognize this must be the biggest concern of Europe also. So we don't have an international governance mechanism where countries are willing to have other countries tell them what to do at home. I mean, that's just as true in the developing world as I think it's true in the industrialized world. To my mind, the real problem is that in the entire post-war period, the growth of prosperity in the post-war period was led by a very determined opening up on the part of industrialized countries of their own borders, which was then followed by the developing countries with some doubts and special treatment and this and that. But in the last 10 years, I think the developing countries accepted the proposition that opening up is good, the Europeans and the Americans have benefited, we should be doing the same thing, and actually, if we do the same thing, we'll also succeed. I think the dominant, I agree with what Mr. Yerksa just said, that the dominant story, although it's been good that the success stories are also qualified. I mean, UNCTAD, for example, has done terrifically good research, sort of pointing out that it isn't necessarily as good as you think. I think the dangers of financialization were documented by UNCTAD way back in the early mid-90s. But all said and done, this basic story is there's prosperity, technology, integration, the industrialized countries have opened up, and the developing countries ultimately accepted that and contributed to that. The danger right now is that this very basic lesson, which is frequently repeated as a mantra, that opening up is good for us, is good for others, politically, it seems to carry zero traction. And in the developing countries, we have to admit, we are late converts to the idea that opening up is good. I mean, protectionism has only very recently been sort of put in place. The rise of protectionism in industrialized countries is a very big problem. But actually, what is more of a problem, in my view, is the complete absence of an intellectual attack on it. I can fully understand that somebody who's standing for parliament or standing for president or even some controversial sort of political race cannot really be expected to talk about trade liberalization when unemployment is high. But I think there's not enough intellectual assertion that, look here, this is what we need to be moving towards. And from the developing country point of view, the problems with the Doha round, I mean, if you look at them politically, the Doha round was essentially peddled, no, that's not a nice word, was advocated, sold as the Doha development round. And that's important because developing countries, having opened up and having seen that trade is good, were being told that, look, this time there's going to be more in it for you guys. Okay? Secondly, it was sold that the one area of trade, of the global economy, which hasn't been touched and where humongous distortions continue, is agriculture. And therefore, we're going to address that. Now, what's happened from a political point of view, virtually every developing country went into the Doha round expecting to come back and say, well, here's the Doha development round. But political support for that appears to have evaporated in industrialized countries. That is very sad. And frankly, all trade negotiations are conducted by countries in the belief that they're going to come back and say, this is the market access I got, and I actually didn't give anything. I mean, that's the way trade negotiators think. They know deep down, I mean, if you strictly follow theory, you can even say, well, I gave market access, and that's supposed to be good for me in the long run, but that's not the way it's done. How are developing countries going to sell an outcome where they would, the way things are now, they would more or less have to say that I'm afraid the development round content of the Doha round is simply not on the agenda. And that is very, very unfortunate because I think I agree with the view that the developing countries have actually benefited in the last 20 years. There's a lot of growth, a lot of removal of poverty, a lot of hundreds of millions of people kind of getting above poverty line. Still too many below, but give us another 15 years and that'll be taken care of. But it is, I mean, if there is to be, in my view, the financial side of the international agenda is not very important because there are too many rules associated with it. But the trade side of the development agenda is very important. So frankly, if I had a choice, I mean, I'm quite happy to have the financial institutions run by nationalities, whoever you like, but as long as you continue the opening up on the trade front, it's much more important.
Can I cite some practical, pragmatic controversies that would need better global governance to resolve? I mean, just some practical controversies. First, in the area of debt and debt unwinding and concurrent negotiations under the DDA and to be modified with the supplementary plurilateral services negotiations. I don't know whether you see the nexus between the two. One is debt unwinding from advanced economies. It will take years to come. Debt unwinding in the household sector, banking sector cleaning their balance sheet, the non-banking sector also trying to unwind their debts. At the same time, we would like to make progress in the areas of GATS negotiation, part of which is the inclusion of opening up of financial markets, particularly for international financial entities. At the moment, things in the financial issues in advanced economy are not yet fully resolved. Banks are not still lending because they still have to clean up their balance sheet. They cannot do it. So, at the same time, past crimes are coming back to haunt them. Past crimes in the time that they try to hide their trading in the areas of securitized lending that are now coming back because they are now exposed because the water has come down so much that you are seeing everything that has been lying under the water so long. There are advanced countries, banking system that has been involved in so various frauds, money laundering across the border, across from different countries that are being boycotted internationally. I don't want to name names because I don't want to embarrass all of them. And here what we are seeing at the same time, the need to unwind debt and the need to make progress at the WTO on services industries, particularly with the key areas of financial services. Can we have this kind of acceptance that these banks that are known to be committed all kind of malfeasance, frauds, and sometimes giving wrong information to the investors as to the real value of their own instruments and products? This is the first point. The second point is on the role of IMF. I've been talking a lot about that, but just one small point about the IMF, and not in terms of lending and everything, but in terms of SDR, spatial drawing rights. This has been something that has been part of the history of us at UNCTAD for so long, because we look at the international trading practices, international flows of funds, and we thought you cannot allow international trade and investment, or even in the areas of denomination of the key areas of commodities like energy, to be priced in terms of one national currency or a few national currencies. Just not tenable, just untenable. Untenable because you are hanging the faith of the whole global economy or whatever new set of consolidation of growth to just only a few currencies that are determined by national monetary policies that are not always reliable, not always reliable. And in the process of unwinding and trying to stimulate, trying to do austerity, whatever confusing directions they are going into. But SDR that has been proposed, supported by UNCTAD from the 60s and the 70s, are meant to help to even out all these kind of vicissitudes, fluctuations in the global flows of funds. And you know how the spatial drawing rights are based upon the way it is being dispersed? It's being done on an intermittent basis, once every few years, maybe twice in the last 2 decades, almost dependent on how advanced countries are going to give sanction to this kind of allocation at the International Monetary Fund. At the moment, during the crisis, post-crisis, we've been talking about reallocation of SDRs. Because, of course, we're not talking about only countries in Asia that are flooded with the reserves. We're talking about small countries, Burkina Faso, Chad, Cameroon, and all these countries in Africa that do need cash liquidity. They were doing so well before the crisis. 6-7% rate of growth, 15% rate of export expansion, and immediately, because they are hit by the recession, coming from somewhere else, they are just innocent bystanders. Now they're growing less than half the rate of growth. In terms of income per capita, they are shrinking every year. So for them, there's no recovery. It's going to be a permanent crisis and recession for them. And they need liquidity. They're not getting it, because high prices of food, prices of energy and everything, so they're losing out. So what we are saying, we have to restructure, or we have to allocate new quotas of SDR. It's not being done yet, because the major countries do not agree. They don't agree. They don't agree because they don't need it, because why they don't need it? They can print money as much as they can, because they have the seigniorage on their own printing of currencies. Everybody will accept it. But SDR would help to support the way the poor countries can get their hands on the trade, survive the need to spend all their money on refinancing of their past debts and everything. We're now working on the next round of debt forgiveness. It's not going to be like this forever. So, and SDRs, as you know, are allocated on the basis of quota of countries. So the quotas are the largest with the EU and the US. They may not need it. They may not need it. They don't need it. But those with very small quotas at the IMF, they need it, they don't have the quota. So the system was based on the strength, on the power, economic power, and not on the egalitarian philosophy that we all would love to adhere to. This is just perverse. So we are asking that, particularly with this allocation of SDR, there needs to be a new governance there to change the concept of this allocation of SDR. The third one is a way the G20 is practicing uneven, uncoordinated recovery process. Some countries are going to full austerities, killing off any growth, creating a lot of unemployment, underutilized capacities. Others are going full speed in the way as if there is no end. All the money in the world until we reach certain level of growth or certain level of unemployment rate. Unlimited purchasing of sovereign bonds. Both in Europe, United States. At the time that people are unwinding that, it's just like pushing on the string. You push on the string won't move. It just moves at that spot. But you can't pull economic. It's just pushing on the string. So the money will flow to anywhere in the world where it's easy to go in and speculate, because at some differentials in interest rates and also the prospect of having higher appreciation of the currency of those areas. So this is another controversy, that while one part of the world is trying to get out of this slow process, slow growth, the other parts are trying to maintain that growth so that the whole world can be helped, but they're not being helped. Because at the same time, they have to fight their own bubbles. Emerging countries cannot be safe at the moment, cannot be said to be safe. All these countries are on the fringe of bubbles. Why? Why are all the stock market prices going up through the roof these days without the global economy regaining the same kind of health? You must ask this question. In economic terms, it means that there is something wrong with it. It's only because we have injected so much money into the system that has nowhere to go. So it would inflate some of the asset prices. And before too long, I'm just warning you, you will be seeing some areas that we will have an excessive rises in prices of assets that would. So developing countries cannot move. On the one hand, they cannot reduce their interest rates because they have to fight a bubble. On the other hand, interest rates at the elevated level will attract more funds. This is a highly controversial issue. And the last one is the areas of trade. While we are trying to nurture the WTO is really absolutely needed in this present world, in spite of the failure of Doha. Even if Doha doesn't finish, the role of the WTO as a guardian of the multilateral trading rules is absolutely needed, must be strengthened even. But if you look at the way Rufus has been talking about FTAs and RTAs, there are more than 500, not only 300, there are 550 FTAs and RTAs, BTAs and RTAs registered, notified at the WTO, but there are only about 350 in active operation. So they're not all functioning very well. Only 350 out of the 500 something. But some of the major ones are going to have a lot of implications. I wouldn't say negative outright, but I am trying to hold back because I fear some negative consequences coming out of this proliferation of all the, I said, major ones, not the one I call developmental regionalism. For me, developmental regionalism means that you have integration of countries in the same area at comparative level of development. But when you begin to have something which is as huge as the Trans-Pacific Partnership, TPP, and the Transatlantic Trade and Investment Partnership, it's called partnership now. This is what we call deeper integration, which will stretch beyond just market access negotiation and tariff negotiation. The transatlantic one will deal with the rulemaking exercise. So what's happening now if two major trading areas, which cover one half of the global output, 1/3 of the global trade volume, are going to make their own rules? Do you think that the WTO can stand aside and just say, okay, we are the one who are the guardian of the trade rules? No. Because these are the rules that are going to make by the largest trading partners of the world, with whom we have to trade all the time. You see, transatlantic trade negotiations are not going to be on tariffs, because tariffs are not there anymore. Tariffs are just close to zero between the two regions. Only the harmonization of the rules. Always I have learned in my lifetime as negotiator that when you go around harmonizing rules, always mean inventing new rules. So there'll be new rules to be invented. There'll be deepening of the TRIPS rule, TRIMS rule, all rules on agriculture, on SPS, TBT, everything. You better brace yourself for this because, and I don't believe they can, I hope they don't finish in 2 years' time. And I don't believe they'll finish in 2 years' time because then WTO will be even more marginalized because with the unfinished Doha agenda, with the rulemaking exercise getting out of the hands of the WTO, I don't think there is much hope. Although we need to do it, we need to strengthen the WTO, and I don't think all these efforts are helping. Sorry to be a bit long.
No, but Rufus.
Well, Claude, your original question you asked about the possible implications of slow growth in the developed world, and this is a debate I'm following very closely. As an observer of the United States and the policy debate taking place there, and I agree with what you've said that it's not doing as badly as some would make it seem. There are clearly problems, and the debate can be very confusing because as I listen to those who say too much austerity to try to address spending in the short term or to address the fiscal imbalance quickly will actually have a very serious contracting effect, and that the real problem for the U.S. is how its political system can get a long-term path on entitlement reform and on more stable revenue situation that sends a strong signal for the out years, because the truth is the U.S. could go on for the next several years with this kind of fiscal imbalance and it would have no immediate impact. It's not really that which is driving the growth problem in the U.S. economy. But clearly the debate among economists can be confusing. I'm not an economist myself. I'm an international trade lawyer who tries to understand the economic debate. I remember when I first met Larry Summers in the Clinton administration, he said something to me. He said, "I'm a brilliant economist. I predicted 9 of the last 5 recessions." So, I sometimes am not too confident that long-term economic projections can give us the answer. I think if you get back to how that relates to what we ought to be doing in the policy mix with respect to trade opening. First of all, I agree very much with what you said about the fact that the disappointment of the Doha round has been a problem for the confidence of developing countries in moving forward with their own liberalization. That's the biggest downside from not having the exercise fulfilled yet, is it was definitely sold as something which was going to give them a better platform to integrate into the trading system. And they were going to finally address some of the very serious problems in areas like agriculture, the residual protectionism in the developed world that was having a disproportionate impact on developing country economies. And that was then going to give them the confidence to move forward in areas like services and some of the manufacturing sectors where they still retained higher barriers. That grand bargain has not succeeded yet, and it definitely has implications for how much confidence everybody has in, or how much trust everybody has in each other in trying to negotiate further multilaterally. Just to go back to one final point, if you look at who's reacted to the economic crisis with reintroducing forms of protection, I wouldn't say that's a phenomenon limited to any one class of countries, any one sort of sector. It's happened in all countries around the world. Have been certain measures being taken. The interesting thing is, and we do a lot of monitoring of this, we have a monitoring mechanism of new protectionist measures. The interesting thing is that in quantitative terms, the grand total of what's been done has not been as troublesome as one would have thought, given the depth of the unemployment problem, the depth of the economic fears that are out there. They have been largely contained, although I would say in some countries and in some regions of the world, there has been considerable rollback in some industries, and that's very troubling. The only way we're going to get out of that is to start to have some optimism about our ability to get out of a slow growth, a cycle of slow growth, and to restore confidence. And it really is true that our biggest fear should be of fear itself. We really have to find ways of recommitting to a belief that those kinds of growth rates are possible. Yes, I look at the European economic crisis, but I say, okay, Europe has survived an awful lot over the centuries, and it's hard for me to believe that they can't find some stable path out of this. It's true that what's happened so far has more been kind of coping with the crisis and muddling through, and larger policy changes have been difficult, but I think they're going to have to come, and I think the governments are going to have to come to grips with the need to make those larger changes.
Any question from the floor? I will take one question, but then we will need, we take two, and then we will need to close. Okay, one here and one here.
The question is to Dr. Ahluwalia. You rightly mentioned that India needs to become an attractive destination for global investment. And you also highlighted on the measures the government is taking, which is commendable. But one more factor that seems to be upsetting the global investors is the retrospective amendment of the legislations, where there is an amount of uncertainty. So if only stability of laws are ensured, for example, that Vodafone case. So again, it's not the question of who is right, who is wrong. But the point is that when the apex court gives a verdict in favor of the multinational corporation, if the government retrospectively amends the law, it amounts to changing the rules of the game after the game is played. So that if India can adhere to fair play, it would be nice. Don't you think so? That is.
Well, I doubt if I can add anything to this issue. I'm aware that the Vodafone case led to a lot of questioning. I think the finance minister, and that wasn't, the honest truth is, if nothing else had happened and it was just the Vodafone case, I don't think it would have had quite the same impact, except of course on Vodafone. Now, the present position is that the many other things that were perhaps wrongly interpreted as signaling a negative stance towards foreign direct investment and towards FII have been, I think, quite comprehensively dealt with by the finance minister. And he's also said, you know, there are some rather important reports which they're still considering. And what he has said, I think, is that at the time of replying to the finance bill debate, which would be sometime in May, he is going to lay out all the steps he's going to take. As far as the Vodafone case is concerned, as you know from the newspapers, there is some discussion going on. I'm not privy to that discussion, so let's hope that we will have some resolution. You know, on the general issue of could India forego retrospective amendment, I mean, technically, Parliament can certainly pass a law saying we will never have a retrospective amendment, but the same Parliament next year could undo that law. So I'm afraid the sovereignty of parliaments cannot be contained by anything other than a consensus on how best to behave. I should, by the way, for the record, say that many countries resort to retrospective amendments. It happens that in those cases, I mean, you have the same problems, people think it's unfair, and then everybody says, oh, it's only a rare event, and people forget about it. The reason why it's become such a big issue in India is that it happened at a time when attracting foreign direct investment was particularly important. Had it happened at a time when India was growing at 9%, reserves were increasing, and I mean, there was no special reason to want foreign direct investment, I can guarantee you that the amount of newspaper coverage it would have attracted would be much less.
Thank you. Question here.
My name is Cem Duna. I'm from Turkey, and I'm a former civil servant and presently an investment consultant. My question is to Ambassador Yaksa. He's a diplomat that I know for well over 20 years, and he's always been a diplomat who thinks twice, but always says something, something very substantial. My question is pertaining to the free trade agreement between the EU and US. As most of you may know, we have a customs union with the European Union, which means that we have to align our trade policies with that of the European Union, which means, therefore, that we have to have the same agreement with the US. Otherwise, there will be a serious market distortion where the American goods can come into Turkey without any barriers, but the Turkish goods to the US cannot go as free as those coming in. So there is no obligation on the part of the US to have a similar agreement or the same agreement, and there is no obligation on part of the European Union to make that an item obliging the US to take Turkey in as well. So although I agree with you that it's a good thing to have this free trade agreement with the EU, but it's not necessarily so across the board. So I would like to get your views on this one.
Well, clearly there's a long course that has to be run between the US and the EU if that kind of an agreement is going to be successful. It's one thing to launch these exercises and to give a lot of fanfare to their launching. But if you look at the big free trade exercises that are underway now around the world, all of them are facing a lot of difficulty in terms of overcoming both the political and the commercial realities of putting those arrangements into place. Most of the easy deals have been completed, and certainly as somebody who worked for 20 years in the U.S. government, a lot of it on U.S.-EU bilateral differences, many of them are very intractable. It's not so much could they get a deal with each other on customs tariffs, but that wouldn't be much of a deal. If it's to be a truly deep FTA, it will have to go into a lot of regulatory issues where there are very significant differences of social policy, environmental policy, even regulation of the financial system and other things that have resisted a kind of harmonization in the past. So for them to go into that kind of a deep exercise is going to be difficult. I'm not saying that it won't work. I'm just saying, I'm glad I'm not the negotiator. And also that in order to overcome things like that, you point out Turkey's special situation. I mean, I would think, frankly, if they're able to take on the kind of intractable regulatory problems that they've had between each other and put those on the table, there should be a way to find a solution to the kind of problem you've raised. That is, within the confines of a larger deal, there should be a way of addressing the relationship with Turkey. And let's face it, these exercises end up being as much about finding the right political formula for selling it as finding the right answers at the negotiating table. The negotiating answers come through the negotiating process. I went through this when we negotiated the NAFTA agreement in the US. If you'd looked at the situation 2 years or 3 years before, you would have said it was politically impossible. But very often big ideas end up succeeding as long as they find an answer to the political questions.
Thank you. We are coming to the close of this discussion. I will not try to summarize what has been said. Let me just take a few points I take from this discussion. I think point number one, and I refer to what you said, Dr. Ahluwalia, I think the good news is your perception that over the next 2-3 years, or a little bit more, but India has the ability and will get back into this kind of 9% growth beyond the 7.4 capabilities that the economy has today. And at the same time, I think the awareness that the infrastructure challenge is paramount for achieving that objective, and that in a way there is today the political will to address it, knowing that the only way to address it is to go more into PPPs with all the issues that needs to be addressed. The second point that I would like to take is truly from the discussion that one of the key challenges that emerging market countries will be facing beyond their domestic issues is truly how the global system will be functioning, whether it is institutions being able to cater more efficiently to the needs, and especially the financing needs of emerging market economies, or the dangers of having, in a way, as you mentioned, Dr. Ahluwalia, the temptation to turn their back to opening up more their borders, their markets, to companies, products, services from emerging markets. And in that respect, let us be realistic. There is a certain risk today because Europe is in a very bad situation. I am not a diplomat, so I can afford to say it. I live in Europe. I think the crisis has deteriorated instead of improving over the last 4 years. I truly believe that Europe is committing economic suicide at the moment, and that it is creating a big danger to the global economy. This being said, we know at the same time that this restructuring of global governance to serve more of the needs and expectations of emerging market will take time. This is not a kind of overnight solution. Then I would like to turn to a last point which I think is very important, which is the fact that in some respect, one silver lining in the 2008 crisis is that it has maybe helped focus the attention to turn from, as you said, a finance-led globalization to a development-led globalization. I think this might be one silver lining in that respect that will help focus attention about the kind of things that need to be done to help sustain the growth dynamism which is at place now in many emerging market economies. So on this, I would like you to join me in really thanking our three speakers for a very good discussion.